Bitcoin is a speculative asset that is used for crime and is bad for the planet. That is the word from the BIS. According to the Bank for International Settlements, Bitcoin has, quote, few redeeming public interest attributes. But despite the latest dose of FUD, fear, uncertainty, and doubt, the crypto market continues to grow with increasing institutional interest. Case in point, Goldman Sachs has now begun trading Bitcoin futures with Galaxy Digital. That's the crypto investment firm founded by Mike Novogratz. Well, joining us to break this down, focusing on the institutional interest and so much more, is Jason Urban. Jason is the co-head of Galaxy Digital Trading at Galaxy Digital, a crypto-focused financial services firm with more than $40 billion in assets under custody. Jason, great to have you with us here on Kitco.
Yep, thanks so much for having me here today.
All right, well, Jason, the crypto markets, particularly Bitcoin, roiled by a few factors this week. But before we get into that, tell us about this partnership with Goldman Sachs, with Galaxy becoming a liquidity provider. Tell us about that.
Absolutely. So, right now, many of these traditional financial services firms like Goldman need outlets in traditional marketplaces like the CME. And Bitcoin futures are traded there. And in order to give them the best pricing, they need firms that kind of cross that bridge. Galaxy is one of the few that check a lot of boxes and allow us to provide them the best pricing for their clients and ultimately for the marketplace as a whole. And so we are acting as a liquidity provider, bridging from that traditional market into the crypto markets.
And this is all part of institutions moving into Bitcoin in the crypto space, driven by increasing client demand. But what does all of this price volatility mean for the adoption rate of institutions?
It's interesting. Early in the year, there was a lot of what I will call aspirational moves by these traditional financial services firms. They were trying to figure out how to get into the market, where to enter, how to enter, what all of that looks like. I think that some of this volatility has caused people to ask a lot more questions, but I don't think it's slowed their desire and their plans to get into the market. And so from that standpoint, we have not seen a drop off in any way on inbounds from both crypto native as well as traditional financial services firms.
All right, so where are we, Jason, in terms of institutional adoption percentage-wise, more or less? What percentage of institutions have come around? Where are they on the adoption curve? If you can try and give us a size and scope to quantify how many more institutions are left to jump in.
Oh, I think we're to use a baseball term, we're in the first inning. What I will say though is, while we're in the first inning and we do see a lot of people, there's headlines every day, somebody's adopting, somebody's getting in. I think that that's a small percentage of people who are actually knocking on the doors, actually setting up accounts, putting into place the appropriate checks and balances that allow them to transact in this new asset class.
So if we're only in the first innings, to use the baseball metaphor, though to be honest, I'm more of a cricket than a baseball kind of girl, but if we're only in the first innings, what does it mean for the Bitcoin price as more and more institutions come into the sector? How high does Bitcoin go as we get further and further into the game, closer to the seventh inning stretch, and then ultimately at the ninth inning? What does it mean for the price?
Well, I think that naturally it means that the price will elevate, just because you're talking about an asset that by design is scarce. And so a scarce asset with more demand is, supply demand curves are going to require that the price rises. And I think that there'll be interesting ways that gets manifested, whether it's with Bitcoin or some of the other projects and protocols that are out there. But I think that's just a natural progression from the adoption.
I mean, yes, stands to reason that the price would rise. Do you have any kind of projection of a price outlook or a target that you may have, for example, towards the end of this year, especially with all of the recent volatility that we've been seeing? Do you have a target that you foresee Bitcoin ending 2021 on?
I feel pretty confident that it will take out the highs that we saw earlier in the year by the end of the year. I think that you can expect with all that FUD, that fear, uncertainty, doubt that we've seen in recent weeks to kind of cause a flat trending market through the summer. And I think that as we pull into the fall, a lot of this institutional adoption and this aspirational moves that we've seen are going to start to manifest themselves, and we should see a market take out those highs. How high, how far, how fast? There's a lot of different views there, but I definitely think that you can see something north of 70 by the end of the year.
North of?
North of 70,000.
North of 70,000. Is there a point to which Bitcoin drops in this recent volatility, which people have just sort of become rather used to as part of the asset? But is there a level that would concern you?
Not terribly. Having lived through a lot of the highs and lows and a lot of the headline risk. I mean, obviously, if it breaks 10, that's someplace where I think people start to get concerned.
Right.
I think the next support level is probably somewhere near 25,000 if we start to trend lower. It seems like we've put in a base around 30, and we've been trading around 30 for a while now. I say a while, weeks in crypto is a while. And the fact that we've kind of held that, is makes us feel confident. We haven't seen a lot of strong, institutional selling. I think it's been a lot of retail and just, we haven't seen the people that bought early capitulate, and that's a positive.
Diamond hands, Jason, diamond hands. Now, speaking of retail, I mean, that has been sort of the prognosis that's been put out there when people try and compare the 2017 crash, if you will. And people are saying, well, the difference is that this time institutions are involved. And I do want to circle back on this whole idea of institutional investors, because that does seem to be the game changer that many of the hodlers say will take Bitcoin, some even predicting well north of even 300,000 this year. I won't get your take on that, but I will get your take on what you find is the biggest deterrent for institutional investors. Because on the one hand, you could argue that the ESG concern is sort of on its way to being addressed with the Bitcoin Mining Council and the push for green energy use. Now more mining taking place in North America. So what do you think is holding institutional investors back?
I think there's a few different prongs. I think that, obviously some regulatory clarity around what can be done, what can't be done. You just saw Basel come out with some new guidance around, requirements, capital requirements for financial institutions holding crypto. I think that the regulatory piece will sort itself out with time. I think that the smart players like ourselves in the space, want to work with regulators to come up with solutions that address their concerns, while simultaneously allowing that the technology that is digital assets, that is Bitcoin, that is blockchain, allows that to flourish. I think the other thing is really education and understanding. The questions that we get routinely are around things like custody, like transactions, like trading. And so as you kind of think through that, at a very high level, it's all the same. But at a technological level, or at a nuts and bolts level, there needs to be education, and there needs to be these firms need to figure out how this works inside of their current workflow. And as they do that, and they are asking the right questions and going down the right paths, they will feel comfortable entering the space.
I do want to focus more on the regulation issue, because you mentioned Basel, and one suggestion that came out of the recent Basel Committee on Banking Supervision is that Bitcoin should carry the tightest capital requirements for banks due to its high levels of volatility. That banks have to hold $1 in capital for every $1 worth of Bitcoin that they hold, which of course makes it very challenging with the price volatility. But what do you make of that requirement?
I think that the fact that there is a requirement is a positive step. Historically, one of the things that people in crypto have always asked for is just clarity from the regulators. Obviously, a one-to-one capitalization requirement doesn't bode well for a frothy market, but it does allow people to get into the market. And if you think about crypto as a whole, it is a bearer asset. No different than gold bars, gold coins, silver bars, silver coins. And so from that standpoint, this is the first step. And as people become more educated, more comfortable, feel better around the asset class, things will change. Rules will expand as people show that there's a responsible way to deal with this in a thoughtful and, measurable way.
I do want to drill down more into the regulation aspect, because that is a big driver of FUD, fear, uncertainty, and doubt. It does still remain to be one of the big unknowns there. Now, we have that BIS report, which I just mentioned. Again, that's the international organization that acts as a central bank for central banks. And it's now saying that Bitcoin has, and I quote, few redeeming public interest attributes. And the report says, and again, I quote, that by now it's clear that cryptocurrencies are speculative assets rather than money, and in many cases are used to facilitate money laundering, ransomware attacks, and other financial crimes. So Jason, it seems to be, again, that the bottom line is to be using this angle for tougher regulations, that central banks, regulators are paying more and more attention to cryptocurrencies, and they want some kind of crackdown to a degree. So what is your outlook on regulation in the United States specifically?
I think that if you look at regulation as a whole, jurisdictionally, agnostic, I think that there needs to be rules like any asset class. I think that the fact that the regulators are acknowledging this and that they're taking thoughtful approaches to it finally, to where there's at least something that we can have a conversation around, is pushing it in the right direction. I think that you can't ignore the fact that digital assets are becoming, a significant player in the asset space. They should be a part of people's portfolios, and as such, there should be some rules and regulations around them. To classify it as being with zero redeeming factors, or I don't think that's a fair assessment. I think that you can look at many different assets and say the U.S. dollar is used in many illicit activities. My grandmother gives me $100 bill just because it has drug residue on it doesn't mean my grandmother's a drug dealer.
Not disparaging your grandmother on this show, that's for sure, Jason.
So at the end of the day, you have to separate uses of assets from the assets themselves. And I think that there are a lot of really positive features to cryptocurrencies, and they solve a lot of problems. Blockchain technology is transformative, no different than the internet was transformative.
But ultimately, you're saying that if we get more clarity on regulation, that in the long run, that's actually a net positive, because it removes one of the unknown factors that may have been holding institutional investors back. Is that correct?
Absolutely. I think that we spend more time and effort, here at Galaxy, finding ways to work with regulators and work with an unknown rule set in a way that allows traditional financial, institutions to step in and say, this rule is what we've used for spot commodities. If you want to trade barrels of oil, you want to trade bushels of corn, these are the rules that have applied. We're trying to draw parallels, and then going and reaching out to the regulators and saying, can we apply this same set of rules that you've stated work over here in this asset class and this asset class? Regulation, we will work within the rules as long as the rules are defined. And there's always a way to find a positive outcome. And the positive externalities that the blockchain technology and digital assets and Bitcoin present to a market is beneficial. And I think that ultimately rules around that will allow those benefits to be manifested in our traditional ecosystem.
Well, there's also a lot of push and pull regarding ETFs. There are some signs that we could see a Bitcoin ETF approved in the US. Do you think that will happen? And if it does, what impact would that have?
I certainly think there's going to be an ETF in the US. The timing of it is unknown. I think that you saw the Canadian regulators step forward and allow it in Canada. And I think that that's a harbinger of what you will see in the US. I think we need to get comfortable around it, understand what the regulators here in the States are looking for, and then create a solution, tailor a solution that addresses those concerns in a way that they feel consumers and the market as a whole is not being mistreated in any way.
So one of the concerns that ETFs, derivatives, future markets bring up is that this could ultimately create more paper Bitcoin, if you will, than there is real Bitcoin. Using a similar sort of analogy that we see issues that we have in the gold and silver market, that there's some concerns out there that there's more paper gold than there is physical gold, and that it allows for more market manipulation. Do you see that as a potential issue, that more Bitcoin derivatives allow for more market manipulation and also on some level dilute the value of Bitcoin?
I think that when you look at like any paper asset that's representing a physical asset, that's always a concern. It's something you need to be thoughtful around, something you need to, as a regulator, as an issuer, you always need to be thoughtful of what impact that has. Having it so that you have delineated supplies and saying for every piece of paper that's issued, there's one gold coin, there's one Bitcoin, there's one silver bar, whatever that is very helpful. I think derivatives, like anything, can be viewed as, as Warren Buffett once said, financial weapons of mass destruction. I don't view it that way. I think that derivatives are used as hedging mechanisms, as ways to mitigate risk, as a tool that allow, whether it's a Bitcoin miner, if it's somebody who's using some token for DeFi or some other type of protocol that solves a problem, derivatives allow them to hedge and they allow them to provide that service. And so do you have to be thoughtful or mindful around it? Yes, absolutely. Does that mean that you should say no? I don't believe that's the case either.
You don't think that it detracts from the purity of Bitcoin, the scarcity and the sort of sanctity of this asset that's supposed to be truly decentralized and really down to its purest form, a currency that also allows all of these libertarian and ideological philosophies to come together?
I don't know, no different than the oil futures market impact.
Well, I don't know that people are seeing oil futures as sort of the savior to the energy crisis in the same way that people see Bitcoin in a way as the savior to the monetary system.
No, that's a valid point, but I think that if you look at futures are simply a way for people to use a placeholder to hedge, to gain exposure, to manage and mitigate risk. In a sense, Bitcoin futures do a similar thing. I think ultimately, when you drill down to what the use case is, Bitcoin, yes, it does address some of the issues around inflation and currency debasement. Like anything, these futures and things like that, tools around that are created to create an easier access point for institutions until they get comfortable with actually holding the physical security. And right. In a way, it's a gateway.
Well, you mentioned inflation, which is a topic we really like to drill on here on Kitco. The Fed commentary recently, how is that impacting the crypto market? The Fed insisting that inflation is transitory, but also hinting that we could see some kind of tapering sooner than the markets would have liked. That there's this idea that the loose monetary policies have created froth across the board. So if the Fed does tighten, that there could be less money for crypto as well. Potentially, do you see Fed tapering having an impact on the crypto market?
I think all markets and all ecosystems are intertwined, right? So when the Federal Reserve does something, I think it does have knock-on effects in every asset, whether it's the stock market, whether it's crypto, whether it's the scrap steel market. As you start to work through these things, yes, that will certainly have an effect. Do I think that it's going to become a headwind? No, I think that the things that crypto has done and the technological advances that it's bringing to the traditional marketplace are a wave in and of themselves, right? Does it change its relative stance or relative standing? Perhaps, but only over a short period of time. If you look at this over a longer period of time, it is a new technology that does solve certain problems. And technology gets adopted and it changes the way we do things. If you think about what the internet did to retail, I think that cryptocurrencies are going to do to to the financial markets.
Which kind of brings us to DeFi, which I want to touch on. But before I get to that, I want to get your thoughts on what you think is the biggest existential threat to Bitcoin that you perceive.
There's a couple of things. I think that at an exceedingly high level, if somehow the cryptography that is the underlying technology that ultimately allows Bitcoin to be Bitcoin or digital assets to be digital assets ever gets hacked, that would be the ultimate existential issue. Now, I think that's been proven multiple times by multiple scientists that can't happen, we need technology that doesn't currently exist, like a quantum computer. So I think that's your ultimate existential crisis. Do I think that things like regulation can be a hindrance? Yes, but no different than when the US outlawed gold coins and people had to turn them in and it was against the law. There's still gold coins that are stamped, 1895 that people have. So you can't regulate, you can't outlaw progress. You can regulate it, you just can't outlaw it.
So short of a quantum supercomputing power that can hack Bitcoin as we know it, you don't see any issues with this going forward as a long-term store of value asset?
Not at all. I think that it belongs in everyone's portfolio, no different than gold does, no different than stocks and bonds in that traditional 60-40 mix. I think that prudent, rational investors should look at this as something that they should have in their portfolio.
To what percentage would you allocate Bitcoin to a traditional portfolio?
A traditional portfolio, I think to look at it as a 1% to 2% allocation, is not irresponsible.